connect with the management of Emcure Pharma. We have Satish Mehta, Managing Director and CEO and of Emcure Pharmaceuticals joining us. Let's get to understand a little bit more about the company. Thank you for joining us. Tell us a little bit more about the company's operations, what the company is into, as well as the rationale behind this IPO and where will the funds be deployed.
So as far as Emcure is concerned, let me tell you in the next couple of minutes. I come from Pune city. I did my MSc in organic chemistry from Pune Vidyapit. After that, I landed in IIM Ahmedabad, and 75 I finished my MBA, and I was the only person from my batch who did not offer any placement because I wanted to do something on my own. And that's how in early 80s, I started Emcure, small company to begin with. But as far as the real marketing is concerned, I started doing in the mid 90s, I'm 95, 96, and I started my own marketing stuff. And that's how, this marketing portfolio has been built up in last 28 years. That's what we have done. And we have built up a company which is, driven by research, R&D, technology and innovation. There are three things which are very close to my heart. So research, technology, innovation has played a very important role in building this company. And as I look back at my journey of last 40 years, my company has given maximum number of new products to the industry. Whether you are talking about chirality, iron, or even for that matter products which are biotech, biotherapeutics. So that's what we have done. And as I'm speaking to you, as per the reported numbers, we are ranked 13 by AWACS. That's what we have achieved. And as far as the company is concerned, today, 48% of the revenue comes from the domestic market, and 52% comes from international market. And when I talk about international market, there are three subsets. One is emerging market, second is Canada, and third is Europe. So that's where we stand today. I'm talking to you.
Right. Good afternoon, Mr. Mehta, as well as Ms. Thapar Shell also joining in the conversation. And after debt repayment, if you could tell us how much will be the debt on the book that will remain, and also after repayment, how much of the interest costs will you end up be saving with that?
So basically, as far as the debt is concerned, as per the published results of 31st of March 2024, we had a debt of 1500 plus. And out of these proceeds, say 800 CR, that we are going to raise by the way of primary, 600 crores, will go for discharging the debt. So as far as the debt is concerned, post listing will be south of 1000 as we go forward.
All right, and looking at the breakdown of revenues into different segments as a percentage of your total revenue, there is a change in mix with generic contribution increasing from 31% in FY22 to 40% in FY24. So how do you see this number moving going ahead, and the contribution from other segments changing as well?
It's a good question, but how you define generic, I don't know. Because if you're clubbing the entire business, emerging, Europe and what I'm saying, Canada, in that case, what numbers you are saying, I don't know, maybe probably true. But at the same time, talking about the domestic market, we are essentially in brand building, and we are building brands, as far as the domestic market is concerned. So here, the component of generic is not much. Essentially, it's a brand-driven company. Which is selling, differentiated brands. So the number that you are saying is probably, consisting of whatever we are selling in the global market, that you are probably taking as generic, I believe.
And in the domestic market, a USP always remains the science, the innovation, the technology, and that by very fact, the focus remains on making our big brands bigger. And so branded generics will always be something that we will double down on.
Yes, that's about the brands and where you all are involved in. What about royalty as a percentage? Do you think that that is coming down? Any a trend that one can focus on or look at?
What really happens, you lead a dynamic company, and suppose, if new proposal comes, that has some, what I would say, element of royalty, that will come. But as of today, no. As of today, the deals that we have, there is no royalty element involved.
Royalty sometimes comes in the in-licensing portfolio, but more and more, as is evident from the Sanofi deal, we're shifting to a different distribution model that is definitely, a win-win for both parties.
All Alright, but also when I take a look at your financials, your margins seem to be declining over the years. Is there anything in particular that is ailing your margins? Could you help us understand why this has been happening?
So basically, there are three areas, which will help us to improve the margins. And I think, we are in investment mode. One thing, that is required to be understood, that we added 1,000 medical representatives. So over a period of time, the productivity should increase. So that will obviously help increase the margins. The second thing, that as far as we are concerned, we need to do better in three therapeutic segments, as in diabetes, dermatology, and CNS. We are in investment mode. So once they mature, the margins will improve in those three segments where we are today in investment mode. And third important factor, which I would like to mention, in last 18 to 24 months, we have created 4 new manufacturing facilities. As far as these 4 manufacturing facilities, we are in the process of ramping up the capacities or increasing the production in those areas. And once we reach this optimum level, that will also reduce the drag that we have in the overall profitability. So we are having clear-cut strategy and plan for improving the margins. It's all about execution of whatever we are doing.
Most important question, I believe, would be
doing in the past, but I believe based on whatever we have done in terms of quality of board that we have, the corporate governance that we have, the transition should be smoother. So obviously what really happens, I think, access to the funds, access to better talent, visibility, these are some of the things, which will help us. But at the same time, I believe the transition will be smoother than what expected, because we have done quite a few good things in the past. But at the same time, in terms of attracting talent, in terms of having growth capital, in terms of visibility to the public and large, these things should work out for us. And it's a very exciting phase, and we are absolutely looking forward to this new phase in our life.
And I might add that our culture has always been one of just putting our head down and doing the best work that we can. So that doesn't change anyway, whether we are public or not.
All right. Thank you so much, Mr. Satish Mehta, as well as Namita, to take the time out and speak to us today on ET Now. We let you go on that note. That was the management of Emcure on the way of its potential IPO. But
if you like this video, then like, share and subscribe to ET Now.